All right, today is Thursday, June 1st. It's about 11 o'clock Pacific Standard Time. And tomorrow morning, the non-farm payroll is going to come out. So I wanted to give a quick update on the euro versus the dollar, which is probably going to be one of the strongest um, markets of all currency pairs. And I want to give some primary counts and some alternate counts starting with the weekly. So from here, you basically can count 1, 2, then a 1, 2, 3, 4, 5, a 3, a 4, and then a 5 for a larger 3. Uh, Clearly you can see that this is a triangle. This is the A, this is the B, C, D, and E for 4. It can also be a B. This can be an X here, and this can be A, B, and then you have a 1, 2, which is a different alternative count. But what I want to pay attention to is if this is the 4 and this is one of, let's just say, 5, and it's due to go below, it has to go below 104 basically. So let's just say this is 1 of 5, then you'll expect price to go below 1.000. The problem that I'm seeing now is this particular area here is starting to look like a leading diagonal. What that means is that if this was a 4 and this is a 1, 2, look how close this is. It's basically, and I'll show you on a daily, basically you're going to get really close to it retracing the wave 1, 99%. Now in Elliott's book it says it cannot retrace it more than 100%, but it's not often that you see a wave 2 retracement retrace it 99%. What that means to me is that it is likely that this could be 4, this can be 1, 2, 3, 4, 5, and then this can be the end of this particular wave down. And what that means is that this will be the leading diagonal, 1, 2, 1, 2, 3, 4, 5, 3. Then you have another 4 and then 5 around here for A, basically. And right now, if all it takes is price to move above, I believe it's like 1298, 1.12998, and this particular E is invalidated. Why? Because if this was wave 4 of E and this is 1 of 5, then wave 2 of 5 has already retraced more than 100% of wave 1, and that's a rule that will invalidate that. And so the alternative to this is that you will think that the dollar is continuing to get stronger, but in fact the dollar will probably be getting weaker towards the euro and making its way back up. These moving averages is also telling the story as well. It's sourced by Ichimoku clouds, but I believe tomorrow if we do see a spike up above 1298, it's currently at 1217, then it's very likely, well actually this will be invalidated. So the chances are is that this is wave 5 and this is wave A, or this will be W. Well actually it'll be A. It'll be A, and then you'll see a B, and then you'll see a C that it could probably come up to about 120 or so before it actually starts to make its way back down. This is on a weekly time frame, so this will take several years to do. But just to show this now on a daily basically, let's see where I'm at right here. So I'll go here to what I'm looking at. This is the triangle towards the end. This is the A, this is the B, the C, the D, and then you have an A, B, C for E. Now you can clearly count 1, 2, 3, 4, 5 for 1. 1 being the largest, the 3 here, it's not the shortest. The 5 will be the shortest, so this particular this is good to go. This will be the 1. Now if I come over here, you have an A, you have a B, you have a 1, a 2, a 3, a 4, and then here is what I really want you to pay attention to. Right now, A tends to equal wave C at equality, at 1.382, 1.618, or either 2.0. 2.0. Now it can't go to 2.0 because it's now invalidated. Right now it already touched 1.618 to the T just about at 1.1274. The price can, if price makes a new high and this is wave 2 still, then price will need to go between 1.1274 and 1.1290 in this area, and then it has to completely fall, because if it goes above 100%, which is 1.1298, then this is invalidated, which means that this is not wave 1 of 5. This is actually wave 5 of basically a ending move, and now we're going in a different direction. So what's likely to happen is, from the look of it, I don't like the look, and I just don't. This looks like a leading diagonal, but it can also be an ending diagonal because they both have the same look. So it's not going to take, if this is the end and you have 1, 2 here, well, we need prices to continue going down. And if that's the case, then this will be wave C of 2, and then you'll see you'll begin to see a really swift strength in the dollar for wave 3 of 5, and then that can carry it below 1.03, then below 1.00, and go from there. So there is 2 likely scenarios that can take place in this market. So keep your eyes open. I wouldn't trade anything right now when it comes to the euro, because it's just uncertain right now. But just to give you guys a different look, this is a 240-minute Ichimoku up data chart, and as you can see, price is already above the cloud. However, my red moving average, it did cross, and as you can see, when it crossed here in this area, prices did go low. We would need this moving average to go back into the cloud and cross over. But this is telling me something. This is telling me that the upside potential is still there. So we need to keep an eye on that. Here's another thing that you need to look at. This is the point and figure. Point and figure, as you can see, the trend lines are here. It's bouncing. You have a target of 1.1, basically, which it's highly likely to get there. But then look what came up, 1.18. So they actually activated a target that's to the upside of 1.18. Right now it's at 1.12. They have it at 1.18, and they also have it at 1.1. And in order for it to get to that 1.1, then these X's and O's need to come back down and break this trend line and then make its way. And as you can see, it looks like it's not doing that. And this is painting a really good picture. So this is when it comes from the short-term aspects of it. Now this is what's likely to happen over the next several hours or several days. It appears that prices may continue higher. So keep your eyes open. This is a 60-minute Ichimoku, and as you can see on the 60-minute price, the red has already broken, and price has already begun to go back into the cloud. So this is a good sign to the downside, and it is appearing that way. That what's likely to happen is if this stays this way, well, then price will start to find its support here. But once this red SMA breaks through this, well, then we no longer have an uptrend. So this is just to give you some of the technicals that I look at on a daily basis. That makes my trading a lot easier and gives me less of a headache. So I'll try to post something tomorrow after the payroll. If not, I'll probably do it on Sunday. But I did say I was going to get out another video and try to do at least three a week. I did 2 this week, so I'll try to get to 3 next week or 4. But hopefully this helped anyone who's who's trading the euro dollar to get a better view of what's likely to happen if you actually even see this in time. But yeah, I hope it helped. If you have any questions, please leave a comment. Enjoy and happy trading.